Good afternoon, everyone. I'm actually literally standing between you and the lunch, so I'll try to be brief and taking cues from how the previous panel was shut. I think I'll try to stick to the time as much as I can. Well, in my career, I have seen three upturns in the economy. The first one was during the period leading up to the global financial crisis. India was doing extremely well, but the growth fizzled out as soon as the crisis erupted. The second phase was immediately after the global financial crisis, when the economy was again chugging along quite well, investments were happening, but that also fizzled out. So I think, to cut the chase, we've been good at running sprints, but we haven't run a growth marathon till now. We are again at a phase when I think things look very promising. It's very different from the previous phases, and I think there is a lot of hope that this is the start of a marathon. So I'll build up to that story in my presentation, and let me start by giving you some of the headline messages. First message is that, well, growth is not something new to India. India already has a track record of high growth. If you take the period from 3 decades preceding the pandemic, India grew at 6.2% per annum. So that's a pretty high rate of growth. Second, I think, thing that comes out very clearly is it's been facing the challenges that come from global disruptions quite well, whether it was the Russia-Ukraine war or even the Red Sea, the tariff wars that are going on. Nothing seems to have derailed the growth story till now. Actually, growth has outperformed the expectations of government, of RBI, of analysts, everyone. So it's a good place to be in. I think in the coming fiscal, the growth may slow down a bit because the central bank has been raising rates, and the objective of raising rates is to slow down the economy and control inflation. But that's going to be a transitory, a cyclical blip in growth. After that, growth is expected to again move up, and we expect around 6.7% growth per annum till the end of this decade, which will make India one of the fastest growing economies. One difference, I mean, we've already grown at high rates, as I told you earlier. I think what is going to happen now is the magic of compounding is going to play out, because you've attained a critical size. So if you maintain the pace of growth, the gains are going to be much larger, I think, if you are able to do that. What is behind all this? Well, India has some domestic strengths. The balance sheet strength is one of the key ones, particularly of the corporate sector and of the financial sector. Corporate sector, the mid-sized and the large corporates, they have very low gearing right now. They have cleaned up their balance sheets, and they are in a position to re-leverage, which essentially means they can borrow more now if they want to. Second strength comes from the balance sheet of the banking sector or the financial sector. Non-performing assets are at decadal lows. I think for March 2024, the NPAs are expected to be close to 3%, which is very, very low. So I think this balance sheet strength is also something that allows you to grow at least over the medium run. And then I think finally, the policy focus of the government also adds to the strength of the economy. We have focused on creating a physical infrastructure. A lot has been talked about digital infrastructure, where we actually raced far ahead. So you're creating physical and digital infrastructure at the same time, and there's a lot of synergy that comes from doing that simultaneously, which I don't think any other country in the world saw both of them develop at the same time at such pace. I mean, so that adds to the strength. Government introduced goods and services tax. The major benefit of that has come to income taxes, surprisingly, because people are not able to cheat on taxes. So the income taxes are growing at the fastest rate right now, because once you are able to get the chain, it's difficult to, you can't cheat on your income tax, you can't be investing in mutual funds, and at the same time declaring a very low income. So I think all that is also helping. And I think these make growth a little more sustainable. So I'm going to talk a bit about this story. Now, one problem that we have right now, I think it's not everything is rosy, is food inflation. And that matters a lot for a country like India, where you have a huge population, and when people face high food inflation, then their ability for discretionary spending reduces, particularly for the lower income households. So that's one problem that the nation faces. Other than that, the other parts of inflation are very soft. This is very different from the nature of inflation that US is facing, where the core inflation is very high, which is, I think, core means you take food out, you take fuel out, what is left is core inflation. In India, core inflation, which is a headache for the central banks generally, is low. The volatile parts of the inflation are leading inflation in India, and that's something to do with climate change to some extent, something to do with what happened to rains. Last year, we were deficient in rains. We got the hottest year in 123 years, I think the hottest August, so to say, which is the time when the crops are ripening, or so to say. So I think this is one problem that we have to deal with. I think on the monetary policy, in general, central banks are at a very delicate phase. They misread inflation completely in US and in most parts, so they will be very cautious this time while cutting interest rates now. They don't want to declare any victory very early. That's not such a good news for many investing firms, because I think particularly for VC, etc., because the credit becomes expensive. And when credit becomes expensive, the funding becomes, but that's also a transitory phase. I mean, economy never moves in a straight line. It moves in cycles. And we will see interest rates also come down. For India, we expect rates to come down possibly in June this year. And the reason is, as I said, it's only food, and we are expecting food inflation to slide down because the winter crops have not been too bad. I mean, so that's what the initial assessment is. Okay, and in general, I think the Indian macros are reasonably in balance. I mean, that's one of the reasons why the country is being looked at as the next growth engine. It already is a growth engine. So GDP growth at slightly slower, 6.4% in the coming fiscal year. Inflation will also edge down, as I mentioned. I think food inflation is likely to come down. Exchange rate, we've seen remarkable stability in currency. And I think that's likely to continue because you're getting a lot of flows into the debt market after inclusion of into the JP Morgan index. We are yet to be included, but pre-positioning has already started, and I think that's showing up in debt inflows. And the 10-year bonds, which is the risk-free rate in the economy, is also going to come down because inflation will come down. Government is not borrowing that much. Actually, the borrowings over the last few years in nominal terms, I think they've remained constant, whereas GDP is growing. So the deficit as a percentage of GDP is coming down. And on top of that, you also have the inclusion into the bond index, which brings capital inflows, which softens yields for bonds, because the money is going to come essentially into government bonds. So let me shift gears from here. I think I'm looking at the time also, so I don't want to rush through this section, but anyway, I think I'll try to do as much justice I can. We expect 6.7% GDP growth for the next 7 years till the end of this decade. So that's point number one. Compounding benefit will play out. The size of the economy is 3.7 trillion right now. It will become 6.7 trillion if you grow at this rate for the next couple of years. Per capita incomes, which are at 2,600, which is the lower middle income category, you will move to the upper middle income category by the, so these are simple numerical calculations. There's no magic about it. I think countries have experienced them in the past. The point is, countries like China, etc., they've grown at 10% per annum. So they saw gains much faster than we are likely to see. But nevertheless, I think this is likely to play out. So how do economists look at long term? Three drivers of growth. One is capital, which is investments. Second is labor. And third is efficiency. So when you can produce more with the same amount of capital and same amount of labor, you become more efficient. So I'm going to argue that capital and efficiency are going to contribute more to India's growth, and labor is going to be a laggard. And I think our calculations show that 53% of the growth is going to come from capital. Efficiency will contribute about 30% to the 6.7%, and labor will be lagging behind. And very quickly, why investments? Well, government followed a strategy of pushing investments in infrastructure as soon as the pandemic came to an end. When the pandemic was on, welfare spending was you had to provide free vaccines, free food, etc. All that reduced, and government started creating physical infrastructure, particularly in the transport sector. So investment as a percentage of GDP went up because government was pushing it. Now, I think government can't keep pushing investments up. We all know they have to keep improving their balance sheet, so the deficit has to come down. Now, private sector is what people are waiting for. I think there was a mention of private sector there. We believe that private sector is ready to take the investment baton from the government, although they are very cautious. They're not going to straight jump into it. Now, there are a couple of reasons why ability is there. Willingness, well, it depends on a number of factors. Healthy balance sheets allow you to invest. I think if your balance sheet is ruined, you can't think of expanding capacity. Second is the utilization of capacity has reached, is above the decadal average, so to say. And in some sectors like steel, cement, commercial vehicles, etc., it's even above the decadal averages. Then I think like rest of the world, we are also giving incentives for domestic industrial policy, which is called the PLI scheme. I think you all must be familiar with that. That also is helping create investments in very strategic sectors where it would not otherwise come, so to say. When government creates infrastructure, steel, cement, they all do well. And steel and cement, I think they're laughing their way to the bank right now, because they're doing quite well because demand for their products is high. Finally, I think there's an opportunity which is not going to last too long to latch on to the global supply chain. Here we've seen benefit only in the electronic sector so far. The reason for why electronic sector has benefited is because it doesn't depend too much on the logistics. Roads, quality of roads, etc. don't matter because it's shipped via air cargo. When the ports, the domestic, other things come into play, you require much better, I think, competitiveness of those factors before overall manufacturing starts chugging along. So this is the least sticky part of the global supply chain. It has come good. Probably the ecosystem will also develop over time. But for that to develop, you need better logistics, better infrastructure, etc. So I think the conditions are very ripe for private investments to chug along, and if government does make it easier to do investments, see, they cut the tax rate. I don't think that has helped as far as private investments are concerned. The ease of doing business, I think, matters quite a lot. Tax stability matters quite a lot. I think we'll see some of that in the coming quarters, but conditions are definitely ripe. I think this efficiency is the major story for growth. And here, efficiency in the economy is coming from better physical infrastructure. It is coming from better digital infrastructure. I need not repeat. I think you all are familiar with the interoperable India stack, which is allowing so many innovations, etc. But what I want to point out is that when you have a better physical infrastructure and digital infrastructure, both come together to create a far more efficient economy. Just to give you two examples. One is the roads. Everybody knows we are building roads, highways. But at the same time, I think the toll bridges are also are being made electronic. 98% of tolls are electronic in India. So instead of 12 minutes wait time, it is less than a minute wait time in many of those tolls. So you're saving energy. All these things add up. And then in electricity sector, you've created smart metering, which is again digital, which has allowed you to save on losses. So clearly, physical and digital infrastructure are helping. And then finally, I think economic reforms, I already talked about it, goods and services tax, bankruptcy code hasn't paid off completely, but is getting streamlined, is going to improve the credit culture because you can't have phony loans, and you can't not lose your company if you don't pay back. So all that is going to improve credit culture. Now coming to labor, I think this is the last part. I think I'll take maybe a minute more. I think my time is up, I can see that. So India has 1.4 billion population, 970 million people in the working age group, which is more than the population of US, Europe, and I think you can add a few more other countries. The problem with India's labor force is that we have very skilled people, there's no doubt about it, but when you look at the entire population, the participation of labor in the work, which is called labor force participation, is very low. It's around 60% for the economy, 37% for women, about more than 75% for men. And the reason why it is low for women is, I think one is the gender gap in education. If you look at women above 45 in India, I think 60% of them did not have school education, whereas this ratio is 30% for men. Similarly, women spend a lot of time in unpaid work activity. So 6 hours, according to one survey, 6 hours of average time for women is spent on activities for which they don't get paid. So it's difficult for them to participate in the growth process in general. But for the population as a whole, education, skills, I think these are the things which will allow people to be part of the growth process. Otherwise, you'll have to keep supporting them via free food grain or free or subsidized stuff. So there is a lot of scope here, I think. So there is a lot of scope for maybe the startup or the venture capital also to how they can make this happen. I think this is something to think about. So let me come to challenges. Here, I think I want to point out 3 challenges which are also the opportunities. One is India is in a unique situation globally. It is trying to grow its manufacturing, it's trying to grow its infrastructure. Both of them are highly carbon intensive. At the same time, you have decarbonization targets. So how do you decarbonize when you are making your growth process more carbon intensive? So it's no other country face this challenge. So India is the only country, because others have dirtied the environment while they were growing fast. So that is a very, very unique challenge, and so this is also an opportunity how you can make this happen. I mean, so around clean tech, etc., all those things I think come into play here. Second is manufacturing environment. When East Asia, China were growing, they were growing on the strength of a very open world, which is called hyper-globalization, which essentially means that the tariffs were coming down, countries were trading more and more with each other. Now it's just the reverse. I mean, you're imposing tariffs on other countries, you're discriminating on the basis of geopolitical preferences, or discriminating on the basis of security or environmental concerns. So whatever the reason may be, the point is the environment is a little difficult for anybody to grow its manufacturing and export. So in that environment, how do you do that? And finally, I think the climate risk is real, and I think we've already seen last year what it did to food inflation. The monsoon pattern is permanently shifting. I think you're getting rains in areas where it did not rain, and you're getting less rains in areas where it used to rain. So I think all this means you need to prepare for changing climate, and you need to mitigate those risks. So anything that will allow one to mitigate the climate risk, I think is going to be the requirement of the future. So these are the things where traditional investments don't take place. So solar, whatever is the case, I mean, you may look at, it could be a crop, a new variety of crop, which is resistant to heat, which is resistant to less water, I mean, or scarcity of water. So I think the point here is, I think I have time for me to go. The point here is that the challenges are also the opportunity for India, because this is a very unique, I've only listed out some of them. There are many risks which are generally likely to play out. Nobody knows the specifics. The global debt is high. When will it blow? Who the hell knows? I mean, so I think there are many such cases there. The broad point is, I think India is uniquely positioned right now. The window of opportunity is next 6 to 7 years, and the chances of it achieving, I would say, I think I would say that its chances of achieving your targets is much higher than, I think, not achieving them at this juncture. With that positive note, thank you very much.